Testing, 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 testing. Testing, 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 testing. Testing has worked. All right. Testing, 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 testing. Testing has worked. $9:30 opening. We're about to take previous week low here. Good morning, good morning, good morning, good morning, guys. How are you guys doing? We just had 9:30 open. Oops, I accidentally have this as previous week high. Morning, how are you guys doing? It is Monday, the start of a new week. Good morning, good morning. We're about to take out previous week low and previous data low. I'm gonna set an alert and I'm gonna do a quick top down. Okay. All right, so I'm gonna do a quick top down analysis of what I'm looking at on NASDAQ, and let's get started. So I'm gonna start from the higher time frame and just work my way down. So here we're looking at the 3-monthly time frame. We have our quarterly low and we have our quarterly high. So every 3 months is 1 quarter. So we have taken out the previous quarterly low. ES, we are inside this 3-monthly fair value gap. Now we're going to go to our monthly time frame. Ever since we have opened on March, we have been bearish for this monthly candle. So what I'm looking at for this monthly time frame is seeing if we can get a closure below this green candle, so this up close candle here, and this one as well. So I'm going to see if price wants to close around this area. Because if we close below at least this up close candle or this one, we'll likely continue this bearish trend. Now I'm going to go to our weekly time frame. So weekly time frame, we have our previous week high and we have our previous week low. So when a new candle opens, you have to ask yourself, what is the more higher probability? What is more higher probability for price to take? The previous week high or the previous week low? So in this case, if we are having 4 consecutive down close weekly candles, then the higher probability is previous week low. Okay, so now we're going to go to our daily time frame. Daily time frame, I still have these marks drawn out from last week. So if we were to continue being bearish, I'm looking for this daily imbalance on the left side of our curve to be rebalanced. So I took the swing high, swing low, the swing high of the high that we made to the swing low. Why did I take those deviations? Because if this was our accumulation and this was our manipulation, then the distribution would be everything down here, right? So if we're expecting a distribution off this power of 3, I'm going to take out my deviations from this high to this low, because this is the swing high and low that came from the manipulation, right? What do we have here? -1, -1.5. What do you anticipate out of this zone? An imbalance to be made. We touch -1, we retrace into the imbalance, we offer fair value to the external low and to -2 standard deviation. -2.5 aligns with this daily imbalance. So if we're likely to take out previous week low, my next draw would be our daily imbalance below. If we close below with bodies of candles underneath this daily imbalance, what's my next draw? My next draw is -4 standard deviation and this swing low. So we have previous daily high and we have previous daily low right now. Now we're going to go to our 4-hour chart. So 4-hour time frame, what I was looking for was a move from up into this 4-hour imbalance once 10 o'clock hits. So I was kind of looking for a opening of 10 o'clock, a manipulation inside the 4-hour gap, and distribution back down, taking out per day low. But if we do leave this as a breakaway and continue pushing lower, taking out per day low, then that's fine. But for the more part, I'm still eyeing this 4-hour gap, because we could have if this does leave as a breakaway before taking out previous day low, we could have us retracing back up into this imbalance. So there could still be a potential scenario for that. So I just did the top down from monthly to our 4-hour chart, explaining why I'm bearish. So now I'm gonna scale down to the lower time frame. So I'm gonna leave this like this. All right, hourly chart. So what do we have for the hourly chart? So hourly chart, we have our weekly opening. This is our 15 actually. This is our hourly chart. There we go. All right, so our hourly chart, where is my thingy? Okay. So this is our hourly chart right here. We have the weekly opening. So we have previous week high and we have previous week low. Yeah, I want to make this visible. Okay. So we have these deviations from last week. Let's see what happens if I put them here. These are kind of better, to be honest, because these have -4, -3.5 aligning with this imbalance. Yeah, I'll leave that one on. Okay. So Asia highs and London highs are on tack. We haven't taken those yet. So If we're likely to retrace into the 4-hour imbalance and invalidate that, then the targets could be London highs and Asia highs. But for now, I'm bearish. For me, it's just crystal clear that we're bearish here. Okay. So I'm gonna put this to the side. Now we'll just go here now. All right, 15-minute time frame. What do we have? Let's see. So we are below the midnight opening price. What does this mean? This means that price is in very deep discount. So if you're anticipating a open, low, high, closed type of candle, then basically this will be perfect because we are in deep discount of a range here. I'm actually going to clear my chart out real quick so you guys can see that. Oops. So if you're anticipating an open, low, high, close, then if the midnight opening is up here and we're below it, like all the way down here, then that would be perfect because we're in deep discount. But as of now, I'm bearish. So let's see. We still have Asia highs and London highs untagged. So if we do take out previous day low, that could be a good target, or maybe our 4-hour imbalance above. But we just had the 9:30 open, and we're about to have the 9:50 to 10:10 macro soon. All right, so this is our daily candle here. I'm gonna make this. Right now it's 9:44. Okay. We did have daylight savings. I just realized too. All right, whatever. Let's do this. Let's go back to our other chart. All right, so we're about to create that 4-hour imbalance in 14 minutes. We're going to copy this and put it on our, take out this candle and put this one on. Daily candle, one candle. We're going to have it as 15. Then just a minute time frame. Like that. All right. So what are we looking at right now? So we have previous daily low below us. What have we tapped right now? So right now we have this 15-minute change in the state of delivery. So I'm gonna be paying attention to this right here. So there's OB. I'm gonna mark this out. So 15-minute OB like this. Make it more, yep, like that. Okay. So you have this 15-minute OB. So we're gonna scale down to the 5 minutes, see what's going down over there. So on the 15 or on the 1 minute time frame, we tapped into this 15-minute OB. We have previous week low below us. We have swept this swing high. So this short-term liquidity rate above us, like this. And we had a change in the state of delivery as well. So we had this change in the state of delivery like this. So pretty much we had a higher time frame PD array, the 1 minute as an aligned time frame. We had a short-term liquidity rate, change in the state of delivery. In terms of SMT, let's see if there's any SMT at the highs. So ES took out the high at 910. Did NQ take that high? No. So we had SMTs at the highs up here. So SMTs, short-term liquidity rate, change in the state of delivery. So pretty much, this looks good. I mean, short setup could probably be like up here into this 1 minute gap. Take profit, buy down here. Yeah, this looks good. But ideally, the entry should have been like at the close of the change in the state delivery. That's where the close should have been.
Order submitted. Order canceled. Order filled.
Coordinates. Seven, 8. One, 9, 7, 6, 5. 175. 197. 6, 5, 75. All right. All right, so guys, I stabbed a short here on NQ based off this 1 minute for value gap. Entry was not very good, but the setup is there. So we're going to see if we get that. because everything aligned here on the model. I mean, all the criteria were met, so we stabbed the short. Entry was definitely pretty bad. I mean, I kind of wanted the 1 minute for value gap, but I couldn't like get on the chart pretty fast. But we're gonna see if we can get the previous daily low or the previous weekly low target hit. So we're gonna see if we can get that. I mean, we had the setup. I mean, price retraced up into this 1 minute imbalance. So initially we came from this 15-minute OB. We had SMTs at the highs. We had a short-term liquidity raid. We had a change in the state of delivery. And then we had a 1 minute imbalance. So pretty much this one minute for value gap above, and we had a breaker. So I entered a short here with a stop above. Pretty tight stop. Not pretty tight, but I put a stop at this swing high up here and target per day low. So this is like a 1-to-1, basically. But the setup presented, so I just took it. I'm gonna make sure that the level of previous week low is the one exactly I have on NinjaTrader. Because the level for this is 19765.75.
Target filled.
All right, there we go. So we took our previous week low now. What I'm gonna see is we can get down to this imbalance below. So this imbalance, the daily imbalance. So we're gonna see if price gets down there. If it doesn't, then I already got my piece of the pie for the morning. But this was like a scalp, to be honest, because we got in at around like 950 and we exited out the position at 954. So this is mostly like a scalp. But I took the short basically because the setup presented itself. Initially, I was waiting for us to rebalance the 4 hour, but since we were so close to previous week low, and we already tapped into this 15-minute OB with a short-term liquidity rate and change in the state delivery, I kind of wanted the entry. I mean, I like the entry. I like the model. Everything aligns good perfectly here, but I don't really like this trade. And the only reason why I don't give this trade a 5-star is simply because the entry. Because look at my entry. My entry is right here. If my entry were to be up here at this change in state delivery or maybe this per valley gap, then I could have had a better stop loss. And I could have had a better trade management compared to this entry right here. So this entry was more of like a late entry, but the ideal setup would have been this trade right here. And this would have gave me a good stop loss of 20 points compared to this one, which was like 57. But overall, the setup and trade was good. I mean, it was a really quick scalp to previous week low. And yeah. So I'm gonna be staying on the live stream and we're gonna keep seeing what price wants to do. So I'm gonna delete all of this. Actually, I'm gonna keep this up. And And this is all during the 950 to 1010 macro too. Gonna delete this as well, and this as well. NQ recent days volatility is extremely high, right? I mean, compared to last year, yes, this volatility on NQ has been different because you have to understand there's new events, new things that are occurring. So the market is never going to be like the same. It's always going to be changing. Sometimes it's slow, sometimes the market is fast. So all we can do as traders is just adapt to what the market is currently doing. So that's like one of the best traits that we have as traders is that we're able to adapt to whatever the market is doing. So if it's a slow market, we adapt to it. If it's a high volatility market, we adapt to it. And by doing that, we're able to still have an advantage to our side.